Hi everyone, my name is Vincent. The Chinese community or CT know me as Jiami Weituo. I'm the co-founder of Hertzflow. We are a perp DEX on Sui. But today we are actually here to talk about some stablecoins for cross-border payment. So actually this is very interesting because I got invited by Richard from Human Finance as the moderator. I'm like, okay, cool. That's an interesting choice because it seems like I'm the only, crypto native guy here. The rest of our guests are actually, more from a traditional finance background. And before crypto, I was actually a remittance service provider in Australia. So we got a license and registration over there, and. Back in the days, I joined crypto in 2015. I was actually joining because I was actually providing on-ramp, off-ramp services using Bitcoin back then. So Bitcoin from Chinese yuan to Bitcoin and Bitcoin to Aussie dollars back in the days where, in Australia, the regulations were not so clear about crypto. I guess like no jurisdictions back then were very clear about the crypto adoption back then. But now, 10 years have passed and everything changed. So it's really interesting to see all the changes, and really it's fascinating to have more and more people to join from all perspectives of the traditional financial world. So I would like to invite every one of you to do a self-introduction about your background. Thanks.
Thank you so much. Can everyone hear me? So I'm really excited to be here. Funny enough, just last week I was in New York at the UN General Assembly, and I had a few panels, again, focused on stablecoins. So it's really exciting. As you can see, my name is Jillian Daku. I'm the VP of Strategy, and I work for a company called Yellow Card. So what does Yellow Card do? Very simply, Yellow Card provides accessibility to the digital dollar through our partnership with Tether Circle. We just announced partnership with Ripple as well, and we also provide, obviously, stable coins from PayPal. It allows individuals as well as businesses the ability to do cross-border transactions utilizing stable coins. So for us, stable coins is not just a hot topic now. It's something that has been used for the last couple of years. We started operations in 2019, so Nigeria being our biggest market to date, and we're currently in 20 African countries. We just announced expansion plans into Latin, Asia, as well as the Middle East. We've done about 10 billion in transaction volumes as well. So there's a lot that's happening on the continent, and I'm going to be really excited to explain how we move from a fragmented ecosystem to now one of the biggest users of stable coins across the world.
Okay, thank you, Regula. Next.
Yes, so my name is Marguerite. I lead the Ledger Cathay Fund. And so by way of background, we are an early stage VC fund investing in crypto companies at seed or Series A stage. We are one of the lucky early investors in Uma Finance, who is co-hosting the event, of course. We also invested in other companies involved in the stablecoin space. That includes Midas, which you might have heard of. They tokenize treasury bills and other traditional financial products to make them liquid and earn yield on top of it. And so as a fund, we are looking at all the different geographies, mostly actually all of the different regions. We are seeing different use cases for stablecoins, and we are very bullish on that. So very happy to talk about it.
Lastly, good afternoon, everyone. My name is Joseph Claytus. I am the VP for Business Transformation at Lulu Financial Holdings. We are headquartered in Abu Dhabi in the UAE. We are an investment arm, primarily investing in cross-border payments companies across the 10 jurisdictions now. Apart from that, we invested in a crypto exchange in the US, one of the largest one. We also have invested in stablecoin payment rails and also buy now, pay later. So we move close to $18 billion annually. Out of that, 2% of that is right now being settled on stable coins. We settle on USDC as well as USDT. We are partnered with Huma Finance, ARF especially. We are connected to the liquidity solution as well. 2 years only into the game, but actually we're looking forward to make it 20% on settlement on stablecoins in the next 2 years. Thank you.
Thank you, guys. Yeah, it's fascinating. And so here comes our first question. So as a guy who's been in in crypto and mostly dealing with DeFi stuff, it's fascinating to see that the first time I ever really touched stablecoin and started using stablecoin was roughly back in 2017. But actually, I think Tether was established back in 2014 or something, right? And after 8 years, and suddenly stablecoin again become a meta, right? Like the hottest topic in the room, like everyone's talking about it, right? So it's somewhat a weird kind of perception you have, why a very day-to-day kind of things to us is suddenly become the hottest topic. So I think business from different parts of the world will have very diverse kind of opinions on this. So I would like to know from your own perspective, why do you think this is right now the hottest topic?
Okay, starting with me. So, like I touched on, we've been in the market since 2019. So before I actually go in a little bit, I want to take you guys on the journey. So by show of hands, how many people have heard of M-Pesa? There we go, I've got 1, 2. What about mobile money? The reason why I'm raising that is because on the continent, like I said, you got fragmented ecosystems. Okay, the whole idea of M-Pesa was that individuals were utilizing a feature phone and a USSD menu to be able to transfer money. Now you have those individuals that are in countries that have serious currency depreciation. They have an issue where it comes to cross-border transactions. Remittance fees on the continent are the worst in the world, especially when it comes to Africa. And like I mentioned, you also have a large underbanked population that don't have access to financial products. So this young population in Nigeria in 2019 are having a problem where the Naira is depreciating, and then you provide them with stablecoins, USDT. They're obviously going to utilize that because they're able to now save products. So that was the first thing. You had individuals trying to hedge against the volatility in the market as the Naira was depreciating. So they're using the stable coins for savings. Now they move to the next level, which is, I'm a large-scale manufacturing company. I need to make invoice payments to China. I do not want to utilize it with Naira. So I'm going to literally convert from Naira to USDT and then be able to make my payment. So you have several different forms and diverse industries utilizing this technology. From the individual that wants to save, from companies that even want to pay employees with USDT, to large-scale manufacturing agriculture companies that want to be able to pay in China and across the world using stablecoins.
Yes, I think as you touched upon, one of the core aspects is also macro trends and where it is today in terms of inflation, all of the facts around the high remittance fees, etc. I think we're seeing a lot of different drivers that are helping towards the adoption and to make stablecoin really the hit word of this cycle. That comes, for instance, with the Circle IPO that was quite revolutionary in traditional finance. It was not only for the crypto users that were used to this topic, but actually we saw a lot of ARK Invest and BlackRock and a lot of those guys that are names that people are reassured about actually participate to the IPO. The IPO was also one of the best IPO debut since ARM in 2021. So that really made the point about the fact that there is a big business behind it. When you look at Circle and Tether, you can't deny that there is a massive business behind it. I mean, Tether is one of the most profitable portfolio private companies in the world with less than 100 employees. They are worth billions. So all of that is going in the right direction. Obviously, there is a regulatory tailwind as well in the US with the Genius Act, in Europe with MiCA. All of that really helps reassure everyone about the fact that now there is no gray zone, but there is an actual regulatory setup in place in which the players can actually evolve. And yeah, I think this is what we're seeing. But looking at it also from a VC perspective, initially we looked at a lot of different spaces when we launched the fund 3 years ago. We were really looking at all the different subsectors, NFTs, etc. And then we started refining the investment thesis around anything related to traditional finance and where blockchain could actually help. We're seeing that a bit like the Christensen innovation playbook and how he's looking at the way businesses are being disrupted. Initially, you start with the launch of a product that seems to be a bit of a minor version of an actual product that already exists. I think if we looked at USDT or USDC, it very much initially looked like a lesser version of what the dollar is, but actually that digital dollar more and more proved to be not so untransparent. And then it started being audited where initially it wasn't audited. It started having a regulation in place, and then when initially it wasn't so close to the dollar, now it's almost always equal to $1, and so we saw the adoption actually kicking in. And that's why it becomes interesting from a VC perspective.
Thank you, Gillian and Margaret, for sharing the very interesting insights, from the day-to-day kind of usage of stablecoins to the capital market, the perception, the new trend in stablecoin adoption. And Joseph.
Yeah, we covered two things. Like one is the hedging against the volatile currency. Second is the geopolitics, and definitely the Circle IPO, right? Apart from that, actually, in my opinion, like what from a LFH Lulu Financial Holdings perspective, 2 years or 3 years ago, we couldn't find a bank where we could actually come and talk to about an on-ramping, right? So it is very difficult to actually find a bank. And if at all actually we find a bank, then actually there is to be a risk premium. So compared to a conversion from your fiat currency to US dollar, which is used primarily for treasury settlement, if we were to convert it to USDT or a USDC, the bank used to charge us a premium, and which made this business model totally unviable for us, right? But thanks to all the regulatory clarity and the travel rules, because actually it's become very clear, the banks have started adopting, and that is one thing that I feel like it just made a change in the region that I come from. And the another one is like the L1 chain is still expensive. It used to be expensive. I don't think actually they are ready for the scale. Okay, L1 chains are not ready. L2 has actually solved that particular problem to an extent, and that maturity has really helped on it. But that comes with another problem, because this multi-chains things about the interoperability on chains, it still is a risk. But actually, earlier I remember a case like when back in a couple of years ago when we were trying to we had assets on one we had on the Stellar and actually on other one on the Ethereum. So there wasn't a mechanism where we could actually do cross-chain. So these are the things actually that were bottlenecks at that point of time. So this got solved now, along with the regulatory clarity about it. Things have really scaled up well.
I see. Thank you. Thanks for sharing. And I would like to just add on one point. So it's interesting because a part of my previous remittance business was involving Cambodia, the Southeast Asian country. So one very interesting thing about that market in adoption of a stablecoin is that they don't really use their own currency. They do have their own currency called Rail or something, but actually most of the people are using US dollars as their fiat. So one very interesting point of an average day-to-day adoption of stablecoin. Even the local banks, they are integrating USDT or USDC into their QR code scanning payment solution. Is that the fake money, right? So people, somehow it's kind of easy for them to really forge the fake US dollars, and for most of the people, they have no means to really tell the fake from the genuine one. So people kind of prefer the digital dollar, aka the USDT, over the banknotes of US dollars. So yeah, just you know, like a trivial kind of information, but here. Okay, so as in like the stablecoin payment infrastructure, right? So one thing many people are curious about is that from day one, upon the birth of blockchain, blockchain is basically for the transfer of money or value, right? Like the token from one to the other, which is technically it's a payment, right? And blockchain is basically for settlement, right? So it seems like we already have the whole thing for the tech, like from a technical perspective, the transfer of token and the settlement of a token to happen, right? So what other infrastructure, in your opinions, we are still lacking for the mass adoption of stablecoin as the universal payment solution?
Thank you so much. I think before I dive into it, I also want to just share some statistics with everyone when you talk about adoption. So I touched on Nigeria being one of the biggest economies in Africa for stablecoins. A chain analysis report also mentioned that it is actually top 1 or 2 in the world. So statistics-wise, in Q1 2024, stablecoin transfers in Nigeria approached 3 billion. In 2024 alone, Nigerians received 24 billion worth of stablecoins as well. So the point that I'm making is, yes, the adoption is there, but there's still a lot more to be done. And one of the biggest issues on the continent is regulation. So innovation always starts before regulation. So Africa has actually made a lot of great leaps and bounds in that department. But with Nigeria, we're actually going through an incubator program. We're looking at now providing a regulation behind it. South Africa as well. From 2024, there's now a license regime where about 135 companies are now licensed. The same for Botswana, received a license in 2022. So yes, the Genius Act is a fantastic improvement, but where it is the infrastructure base and the last mile where it comes to Africa is that fragmented regulation. Traditional financial banks are not going to go into this unless their regulator and government have given them a no objection to do so. So until that happens, the numbers that I just read out to you, and if you look at, I think it was Citi that just released this new report, as well as the Goldman Sachs Insight report, there's a lot that we can do where it's going to be the volume of stablecoins, and this will be one of the biggest things to do in Africa to get there. So I've talked about the last mile. There's also the aspects of compliance. So those are the things that is top of mind before you can say this adoption is going to get even further or grow more.
Yeah, I think that's very true. It's regulation, compliance, and UX. Today, it still sounds much easier for a lot of businesses or individuals to send a transfer than to have stablecoins. So I think those are the 2 points that really need to move forward in order to have a mass adoption.
When I see payments is, blockchain actually solves finality very well, right? But payments is not just about finality. Okay. Payments is about speed, scalability, right? Interoperability, compliance. This actually has to come from the industry. Right? It has to come all together. So if you really look at it from an infrastructure perspective, the bridging between the chains, it's still risky, right? And it is you still have higher gas fees on both sides. That's still not sorted. Travel rule and compliance is still fragmented. So, now this is actually single currency in terms of stablecoin used across different jurisdictions. It acts very differently. On-ramping and off-ramping is still expensive, right? The final thing is the last mile, right? So until we solve all these particular problems, right, you cannot, scale up to the wish that we want, right? It comes with a lot of merit. So what we are seeing is that certain jurisdictions have picked up well. Actually, they are trying to solve different particular problems. But when it comes to cross-border payments, both the jurisdictions have to solve it equally, right? Until then, actually, we will solve this. But actually, this is happening, but it will be very slow.
I see. Yeah. So the same thing kind of like happening in China as well, because for the because China is basically one of the I think it's the biggest in, exporter in the world. Even crypto and the stablecoin is still not technically legal in the country, but actually when it comes to private sector, especially for the exporter and the manufacturers, they already started using stablecoin, and in many parts of the China, it's actually pretty prevalent kind of choices already when it comes to like dealing with like foreign business partners to like India to Africa. Like this is what I heard from them, and basically. It's the other party who are like already like requiring this kind of a solution to be in place, but unfortunately, because we are still lacking the clarity from the regulatory, the governance part, the government's part, so it's still very much like in ambiguity. Yeah.
Well, I think that's where we're seeing a couple of differences between the bottom-up adoption and the bottom-up and top-down adoption. For countries like China, Hong Kong, Singapore, it's very much going to be a bottom-up adoption where it's going to be driven by institutions and the different regulatory bodies. Whereas if you look at other geographies like Africa, it's going to be a bottom-up adoption where it's really the end user itself as an individual really feeling the need to use the stable coins for all the different reasons that Gillian put forward.
Also, just to add, when you mentioned the factor of that in some countries you touched on, it's illegal. We actually published a regulatory report on Africa and emerging markets. And in Africa, it's only Northern Africa where there has been, you can say, a no-go area. But for the rest of Africa, Anglophone, Francophone region, we are looking at that adoption, and the regulation is looking much more favorable towards that technology.
I see. Yeah. So like different countries, they have like a different pathways towards the same kind of things, right? So basically, do you guys see that? Is there like a big opportunity? Like a bigger possibilities for the traditional like institutions to move into like a stable coins and somewhat somehow like cause like pressures on your existing business as you are basically the first movers. Yeah.
100%. And with that, I'd like to close off with, again, some fantastic statistics. So Citi's report literally said that by 2030, we're going to have a stablecoin float of 1.9 trillion. Okay, and that's conservative. You got 50x volatility that supports 100 trillion in annual transactions. By 2030, stablecoins could support, like I mentioned, 100 trillion in annual transactions, even in the base case. And that's not niche. Africa's demand in demographic and practical use cases, you got 1.6 billion people today, heading towards 2.2 billion by 2050. So it's not going anywhere. The numbers are fantastic. Now, we've already started, first mover advantage, like you said. Now traditional banks are going to be rolling in. The regulations are going to be paving the way. And those numbers that I mentioned are just going to grow from strength to strength. And obviously, that's the alpha, and that's the revenue, because my whole world is about revenue. So that's what I'm paying attention to.
Yeah, and you mentioned Citi's numbers. Actually, the CEO of the Citibank made a statement, I think it was last week, saying that actually they are ready for it, and they want to create the market for it because they feel that from an individual account owner perspective, it's still too abstract. So I think once the big banks start doing that part of that education work, that's definitely going to help for the adoption wave.
Yeah, that's right, actually, because the traditional banks, they're coming forefront, but what they lack is infrastructure, right? So we see the opportunity where we are building the whole settlement infrastructure. Tomorrow, what we want to do is like we want to monetize that. We want to make our settlement infrastructure as a profit center, right? So settlement as a service, right? This is something actually which we look at a large opportunity because the B2B cross-border payments, the B2B, along with the B2B treasury coming online, will unlock a lot of opportunities for the corporates, right? They have not touched the DeFi. They have not touched the the rest of the elements on the crypto side. So these opportunities are there. So in providing infrastructure as a service is our go-to strategy for us.
And just to build on that and reinforce as well the argument that this cycle, there is really something happening around traditional finance getting into stablecoin. I mentioned another portfolio companies of ours called Midas. And basically, Midas operates as the tokenizer for tokenizing any financial product. They started with treasury bills from the US, and now they're doing other products such as tokenizing private credit funds, such as Fasanara, for instance. And the demand that they are receiving from the asset managers front is really tremendous, and they were just waiting for the right infrastructure and for the right enabler to act on it. So within less than 6 months, Midas went from 40 million in total value locked to 1.2 billion, and that's just within 6 months, and it's a team of 15 people. And basically, if you think about it, you can apply that to any financial asset, and so that can really create a massive wave in the traditional finance industry.
So in summary, so this is about, like, first is awareness and the infrastructure, right? And then finally it's going to be the liquidity, and like no matter if it's from the DeFi side or the CeFi or TradFi side things. All right, guys. Thank you for sharing this very wonderful insights, and thank you very much.
All right, give it up for our cross-border payments panel, everybody. And of course, we're going to end it with a nice little family photo. No, don't leave just yet. You guys are still friends. All right, say cheese. Okay, wonderful. Well, thank you very much for that cross-border.